and welcome to this special edition of our show as we mark MSME Day, a day dedicated to recognizing the contribution of India's micro, small, and medium enterprises, the true backbone of our economy. The spotlight is on the challenges, transformation, and tremendous potential of India's 60 million plus micro entrepreneurs, many of whom still operate outside the formal financial system. Joining us in this conversation is a leader who's deeply committed to empowering India's small businesses, Mr. Shaji Varghese, CEO of Muthoot Fincorp. Under his leadership, the company has been building innovative, tech-enabled credit solutions for MSMEs, from QR code-based lending to daily repayment models to collateral-free loans and some sector-specific offerings tailored to grassroots needs. We'll explore how Muthoot Fincorp is bridging the credit gap, driving digital inclusion, and supporting the MSMEs of Bharat. Welcome to the show, Mr. Varghese.
Thank you so much, Geetu, for reaching out and having me over for this discussion.
Pleasure is all mine, sir. Let's start with the MSME space of India, and MSMEs is truly the backbone of our economy.
Right.
And Muthoot's commitment to financial inclusion is helping MSMEs grow for sure. India has 60 million plus informal micro enterprises, and most without formal credit access. So what, in your view, are the top three structural barriers preventing the MSMEs from accessing credit?
Okay, I think very relevant point, and thank you for asking this. Before I just reiterate the importance in a quantified manner, okay, so that we understand the size of the task and the responsibility, all the stakeholders together to deal with. As you rightly said, out of the 6 crore of Indian MSMEs, estimated 6 crore, the estimate is that only around 20% are part of the formal credit system. There is a definite need for them to be part of this has to go much higher because of various reasons. The bigger picture at a country level, at the nation, is that, just imagine that each of these MSMEs able to create even one employment in the near, few years ahead. One of our biggest problem in India, which is the unemployment, will get addressed. And who else can create, this job in the hinterlands of the country and the local, markets? Neither the technology companies nor the manufacturing companies will never be able to achieve this. So addressing the need of MSME and the retailers are not just a problem of a sector we are addressing, we have to do, but for the nation at large. Now, as you rightly said, they have been the backbone in various ways. They have been contributing. Truly, they are the nation builders, actually, by creating job across the nation, one side, and their contribution in, even export is very, commendable, and, active contribution to GDP as well. Okay. Yet, we have been speaking, but they're not there. So a few hindrances, one of the biggest challenge is that, there are certain limitations, for them to establish their both credit worthiness and their business stability because they are data poor. That's the unfortunate. Because the traditional way of financial services have been appraising and taking a credit decision to extend loans to them, or credit to them, is not fitting the reality of their life. Okay, there is clearly one. Second is the MSME, especially retailers, their requirements are very, very different than the traditional financial services products. Example, of the 6 crore what we just mentioned, a large majority are retailers. Their credit cycle is maybe 1 day onwards, maybe 3 weeks and 4 weeks. So they need a product which is daily repayment or a week, with a short tenor in nature. Okay, in contract. Why should somebody, a retailer, pay 30 days interest through EMI while the credit cycle is only for few days and they already have received the money. In effect, the cost of that, loan goes up. So this is second part. They need different products. Okay. Few of them to mention clearly is they need short-term credit where matching the repayment to their cash flow.
Right.
Second, they are limited in documents. So we need to underwrite and take a credit decision based on the documents available. Okay. The third thing is, there are institutions even insist to have a credit history for them.
Okay.
Okay. So they have never accessed a formal credit. Where will the credit history come from? Because it's all to do with the underwriting model, which is, because touch and feel is very expensive. That's a little different. Okay, these are the few things for me to definitely highlight. And many of them don't have income tax returns and GSTs, GST just come only a few years back. They don't have balance sheet and the formal account, papers to prove to the lender. So it's a combination of all. And there's a definite and urgent need because especially the retailers, it's time that they even do trade modernization. Even to deal with the, e-commerce and other challenges, which is, I don't want to say challenges, as the, e-commerce thriving and, to retain their client base and the business growth, they may need that too. So coming into the funding requirement, the short tenor, which is for the working capital, of course, they need long-term debt for trade modernization. And third is the inventory finance, or normally called as channel financing. Okay. Today, what is really happening is this channel financing is, I think, reasonably well evolved up to a distributor. But a distributed retailer, okay, or an MSME who lists the good, again a B2B, that there is a definite gap in that space. Okay, there again need a very customized product, So this is where, this space is. But the good news is, in the recent past, as a nation which was data poor, especially these retailers, now have gone data rich. Thanks to the, the DPIs, the digital public infrastructures. So a lot available now. Some of the lenders and especially NBFCs are able to make a sense out of it and able to underwrite. So that's a good news.
So India's government's focus has been on MSMEs, and when we talk about $7 trillion economy by 2030 and a developed nation by 2050, the MSMEs have to really be, they are the major contributors and they have to drive the economy higher. As you suggested that there are still gaps. So what are the policy reforms that are still required and is there to make this sector really stand out and perform?
Yeah, I think you rightly said, just to quantify again what the size of the task in hand and the responsibility again. By the time, today we are close to a 4 trillion, coming close there. By 47, if we have to become a developed nation, our GDP has to be, very close to, 40 trillion, upwards of 30 trillion, almost 10 times we have to grow. And incidentally, today's US economy is only just around that. So we actually will have to grow today. So of course, there's an inflation they will definitely be going to grow for another year, which means we have to be an economy bigger than today's US. Okay, as you rightly said, that can only happen, more entrepreneurs, especially, locally led MSME to come up. That can only happen through credit supply. Okay, that's the way to go. When it comes to the policy front, I think a lot of very, very clueful, well mind-applied action and activities have been done by, both central and states across the country. Okay. I think the best thing happened for the country and not just in the policy front, but translated into real action and material is the, data poor these individuals and the families have now become data rich. They are now able to kind of prove their vintage in the business, credit worthiness, and now they have an identity. Okay, even through Udyam as a establishment, business establishment. So a lot has been done. Even the GST is leaving behind a lot of at least the trade volume and the turnover, and so many things are happening. Now, of course, when it comes to the product offering, a lot more to be done. Okay, I'm sure that this lot digital and the technology interventions and the innovations are happening on the decision side and originating side. We are yet to see fully played out or playing out. I think it's a matter of time. There's always a lag effect from the time the initiative is taken and really translate into the benefit of these MSMEs and the end beneficiaries targeted. I'm sure, it's definitely going up. And in that space, I think NBFCs are definitely positioned to play a larger role. Okay, because of their ability to customize their target group itself. Many a times, like a company like us, Muthoot Fincorp, we exist only to serve the common man and the small entrepreneurs. So we have a mindset towards that, and we also develop products and services accordingly. Maybe little later, if time permits, we can always discuss that as well. So there is a lot happening in that space, but yeah, the ask raise and the demand is much higher. I am sincerely hoping, it's like the giant wheel moving, it's an inertia. It starts slow, but then it will start catching up, and the overall velocity will go up. I am very hopeful there. Some of the areas, since you asked in the policy front, what we could do, in the last two budget speeches, Honorable, Finance Minister, did mention, unequivocally that the importance of start using this digital footprint and not the conventional way of underwriting only ITR and, credit bureau based, but on the digital footprint underwriting to be done and credit to be supplied. There are companies like ours are definitely moving forward there. Today, purely on a digital footprint without a human intervention, in few minutes, we are able to disburse a loan. But on the other side, for us to lend also, there has to be liabilities correspondingly, and for which obviously banks and other financial institutions need to supply that credit, understanding how the whole digital lending and this segment operates. Okay, it would be nice. Now there has been a priority sector and all those, in different forms. Okay, if such a large infrastructure the nation has built in the DPI, and which is very inclusive in all these millions of MSME and especially retailers are forming part because they are part of the DPI. Why not have a sub limit of lending requirement, or some kind of a direction or an incentive for the banks to supply credit to those who can serve them? Because the ticket size would be small and it may need much more customization, like a daily repayment, which I mentioned. So of course bank can always lend to us. Intent, we can reach out on. This can be one. It's not a policy level action at all. It's a decision to how we can supply eventually credit to that segment, because just to see that there is adequate credit supply for them to stay afloat and they keep growing. At a policy level, a lot has been done, to be very frank. We are waiting, that translate into action. And for example, NBFCs are rising up to the situation and doing, maybe a decade back, the NBFC share used to be only around 12 percentage of the total credit.
Correct.
Now it's almost reached 18%.
Yes.
Okay. So, and NBFCs are also, have exhibited over 20% growth in last decade, far higher than banks too. So it's clearly showing that NBFCs are able to reach out to them across the nation, and we are very close to the customer. Physically, our ability to serve is also exhibited. So I'm sure it's progressing, but it can be better. One of them I mentioned is banks and all to ensure there is credit supply customized to the, this requirement of supply to the MSME. The traditional way of only giving to MSME may not really work because the large majority are small entrepreneurs. They may not fall into the medium enterprise. So a retailer today just need a few lakh, for example, they may have a single product shop, as simple as a vegetable shop. He just wants to start a fruit shop now. He just need only 40, 51, less than a lakh. But that supply, company like ours are better positioned. So supply of debt can be a little better. Otherwise, lot is been done. It should start playing out. Yeah.
Let's talk about the products that Muthoot is offering. You have Vyapar Mitra, Vyapar Vikas, Nirman Mitra, Pharma Mitra.
Yeah.
How do these offerings differ as far as the customer profile is concerned and the repayment trends are concerned?
So actually, we have 4 different, product offerings there. The first one is to meet the daily, credit requirement. Okay. So there we give a loan up to 4 months broadly. One could take and repay any time without any prepayment charge. It's a very simple process. They can use our, a mobile app. It is branded as Muthoot Fincorp One mobile app. They could, transfer end of the day digitally. And the interest rate comes down the very day upon receiving. So it's a daily diminishing method model. They could always come back and take whenever they need as well. It is like a, anytime money, anytime credit line, provided you pay back on time. As they pay back on time, the, credit limit also can keep going up. There is no requirement of a past credit history or ITRs and all those, because we have over 3,700 branches. All these are in the CBD, Central Business District, or wherever the prime trade centers. So there are thousands and thousands of shops across the country, or lakhs, millions of shops are in and around our branches. So we have a proximity and reach to these shopkeepers and traders, which includes, we have, branded it differently to connect with them. For example, Nirman Mitra is all about construction material suppliers and the retailers. And, Pharma Mitra is all about the pharmacies, pharmacist and the medical shop. Okay. So then, of course, we have our, Mitra is for generally anybody could avail. So that is one of the product offering, which is working good for us. Then comes the, the supply chain finance, the last level, which we have been offering, just over a year now. And we have kind of stabilized the system, technology, controls, all those have just fallen in place now. So we look forward to scale that up. The focus is to bridge the gap between the distributor and the dealer. There is no lot of credit supply is not there, and many times the distributor who is financing there. So that's one. We do our 100 crore a month now, and that's second product. Third is a long-term debt for trade modernization or some of the capital investment, because obviously that needs for a longer period. So there we give, upwards to 5 lakhs to 50 lakhs. Of course, that's a secured loan against the loan against property. And one could avail for trade modernization and so on and so forth. The fourth one is the digital lending, by making sense out of the UPI transactions. When you go to platforms like Phone Pay or Paytm, you have a loan option. We are one of them who provides loan through that platform. So these are the 4 products being offered. Our daily repayment program has definitely seen a lot of interest to the retailers, because it exactly meets we are able to match their credit cycle and cash flow. So, which is working good for us, and we are hoping that should scale up, and the daily working capital requirement, we should, this comes very handy and for these retailers.
So what is the kind of data that you capture for underwriting? I mean, if there's no collateral, So how does it work?
Yeah.
You know,
So
yeah, yes.
there are two types of products here. One is on the purely digital lending. So they are leaving a lot of footprints in this, payment apps, right?
Okay.
From how much of,
Uh,
trade for the day. And we also
mm,
understand, based on their trade, what
mm,
is the industry margin we have arrived. We know
okay.
today, reasonably, a pharmacist will make what is a profit margin, or a
Mm,
retailer, would make a profit margin. So we
mm,
broadly arrive based on that, what is the cash flow available. Then we
mm,
do a fixed obligation to the income ratio. How much is the income? Then we'll deduct all the any other loans and stuff which is also available through credit bureaus and wherever
okay.
available. And then we
Mm,
understand what is the disposable income.
mm,
From that we
mm,
arrive at repayment capacity, and then we give. This is one. Of course, then we have
mm,
the credit bureau report if they have a credit history. Okay, so
mm,
this is well verified. It is not that it is not verified, just
okay.
that the income and the repaying capacity is not verified based on the ITR and the
Mm,
past
okay.
records, but on the cash flow. We really
Okay.
assess the cash flow.
Mhm,
This is one.
mhm,
Second is shops near our branches.
mm,
They of course go meet. We take proof of vintage in the business in the form of we get in a lot of footprints available there was
mm,
shop act registration, and so many other documents, and plus they are in and around our branches. Our branch
mhm,
managers and the colleagues are all in and around. They do understand that the local nuances. Then we of course go talk, understand their trade velocity, and what is the kind of loan, if they have availed anything,
mm,
what kind of asset building they have done. There's a way of
mm,
understanding both a mix of dialogue and along with the documents which is assessed. That's how we operate. Even for a loan against property, which is a long tenor, they have limitations to give documents, but there are alternatives like the bank statement, the UPI transaction
mm,
velocity, you know, and the kind of purchases they have done. You also need to
mhm,
see, even though all these shopkeepers today, uh, some of them, when they sell, maybe
mm,
the income may come in the form of cash, but when they purchase, thanks
mm,
to GST, it is through a
mm,
formal channel only. So there are ways to estimate how much of purchase they have done for recently. So
mm,
all these are available. Just that it needs much more legwork.
mm,
It needs more technology intervention. So that's how we really come to a conclusion. Okay.
mm, mm,
So both in unsecured and the secured loan. It's an evolved model. Just that it needs a different mindset and a mission that one should be okay to give that
mm,
small loans to
mm,
to this requirement. Yeah.
mhm. Uh, so how does your MSME loan book performance in terms of NPAs compared to your traditional gold loan portfolio?
See, look, so gold loan NPAs are always only a time gap, because
Mm,
the loan to value is only a 75% by regulation, but the reality it never crossed. Maybe it's 67, 66, 67%. There is a lot of headroom available. It
mm,
may not really translate to the losses.
mm,
Okay, but when
okay.
it comes to other businesses, the
Mhm,
NPAs definitely would be higher. So we have made the whole business plan and the risk appetite is based on the nature of the risk involved. See, adequately, we also build an environment of higher plan. Only thing I
mm,
can tell you is broadly our NPAs and the delinquency are within the plans of the each businesses we have built. So the way we operate and
mm,
manage and mitigate the risk is the delinquency and the ultimate credit loss are
mm,
different for different business. It is very well planned and deliberated, calibrated, and then go all the way up to the board, and then the approval happens. Okay, so we are comfortably placed.
mm,
Just to share some number overall at a book level, our NPS of March was only just around 1.5%. So it is
okay.
comfortably placed, Gitu, well
Mhm,
within
mm,
the risk appetite and the plan we have built. So we
mm.
continue to do all the businesses, and we continue to supply credit in this space.
What is the AUM as of now, and what's
Yeah.
the kind of rate of growth that you expect in FY 26?
As of today, our AUM is around 32,000 crore. Okay, and the on book outstanding is slightly, around 32,000 is our AUM today. And on the growth opportunity, the way we look at is we don't have a defined number, which we, forward-looking numbers we don't share as an outlook as a company. But having said, we have seen in last 3 years, over 3 years, we could see a good growth momentum, and the AUM is almost doubled in last 3 years. That is out of the capacity we have built. We have built new businesses. So each of these businesses are contributing alongside our gold loan, which is our traditional business, the flagship business, also growing. So looking at the capacity, we feel that we should continue the momentum. So there is a definite gap we are trying to do. We have done more product offering. We are trying to deliver the way customer would like to have it delivered. We are trying to develop products in a way it can match the cash flows and the requirements of our target group. And all these together, we should continue the growth momentum.
Any new partnerships that you're working on, sir?
See, we have declared a partnership recently with Bank Bazaar, okay, where we are making our product offering, especially the gold loan offering, through their platform. They are over 10 years old, one of the early fintech companies in India, and they have a large client base. So we have a partnership we have signed up now. But yeah, we're just integrating the systems and all. Sometimes in July, we should start making it formally available. So we do have a partnership mindset. Okay. And on the digital lending side, we already have a running partnership with PhonePe and PhonePe, BharatPe, and Paytm. So that will continue. So, we always keep our eyes and ears open. Wherever there's an opportunity, we look forward to partner. Yeah.
One last question, sir. The Reserve Bank of India has cut down on the interest. We have 100 basis points cut, 3 continuous policy cuts. How do you see this auguring for the margins of NBFCs, and how beneficial it could be for NBFCs?
See, I think more than the margins, I think it's a larger message and a direction. I think we should read that way first, So it is going to definitely help us for more credit supply and whatever intervention which is done. Supply of money would be more. And eventually a reduction in the interest rate also will eventually we get transfer, transfer to these consumers and borrowers, because there's always a lag effect a little bit, because there's a borrowing which is done a fixed, from a next renewal only rate will go up. So more supply of credit at a lesser cost is definitely so good for the growth. The thumb rule is like this, what we have seen. There is no rule. The trend what we have seen is around 2.5 times to 3 times of credit supply needed to achieve the respective GDP growth, which means 1/3 of the credit growth is the trend we have broadly seen as the GDP growth. So other way to say, of the GDP growth, 2.5 to 3 times is the credit growth. So the more the credit growth, obviously, as long as it goes more to the product, income generating and that side, so they will have more stimulus, growth for the economy. So it's good. They're all looking forward.
Mr. Varghese, बहुत शुक्रिया आज प्रोग्राम में शामिल होने के लिए. Thank you so much for your time, sir. It was a pleasure to host you.
Same here, Geetu. Thank you for reaching out and having a conversation. Thank you so very much. Thank you.
Thank you so much, sir.